Good afternoon, traders. Welcome to another CWG Markets trading session, live trading session. And in today's session, we're going to be looking at trading the first NFP of the year of 2026. And in this session, what I'm just going to try and do is give you and show you a systematic and technical approach to trading the financial markets during this closely most watched high impact news event called NFP. Now, before I continue with the session, I just want to bring your attention to the fact that any news, opinions, research prices, analysis, or information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you're looking for investment advice, then get in touch with a regulated financial advisor. Now, for those of you who haven't met me, my name is Dumelo. I am a senior market analyst at CWG Markets, and I am a professional trader for the past 10 years, focusing on trading currencies, commodities, stock indices, cryptocurrencies as well. So for those who are not part of our CWG Markets community and want to get access to market updates, daily tips and analysis, then be sure to subscribe to this channel where we provide daily tips and analysis regarding anything that's happening in the financial markets. So the agenda for today is as follows. What we're going to do is firstly, we're going to check our economic calendar for any high impact news that are coming up in the markets. Then what I'm going to do is I'm going to analyze the markets, scan the markets, looking for trading opportunities to capitalize on. And then what I'll do is I'll explain the strategy and my strategical approach to the market so you can understand exactly the steps that I took throughout the session in terms of looking for opportunities to capitalize on in our NFP session as well. So starting with our calendar, first thing we're going to check is what high impact news are happening this afternoon. And as you can see, we have high impact news on both the Canadian dollar as well as the US dollar, where you can see we've got CAD employment change, CAD unemployment rate, average hourly earnings month on month, non-farm employment change, as well as our unemployment rate for the US dollar. So these are high impact news, and basically for today's NFP, what it is, what I'll do is I'll give you just a general overview of what each economic index represents so that you have a fundamental understanding of what is happening today. So starting with our CAD employment change. CAD employment change is an economic indicator that measures the net change in the number of employed people in Canada over a specific period. This indicator is a critical indicator and gauge of the health of the Canadian labor market and overall economic activity, which has a direct influence on the value of the Canadian dollar, which tends to lead to high probability of high volatility in the Canadian dollar as a whole. And then we've got our CAD unemployment rate, which is an indicator that measures the percentage of the labor force in Canada that is unemployed and actively seeking employment during a specific period. And again, this is also a critical indicator of the health of the Canadian economy, which then has a direct value and a direct influence on the actual value of the Canadian dollar. Now, when we move on to the US dollar, we've got our average hourly earnings month on month, which is an economic indicator that measures the monthly percentage change in the average hourly earnings of all employees in the US, excluding those in the farming industry, which again is an indicator of the US labor force as well as the general market conditions of the US, which tends to have a direct influence on the value of the US dollar. Then we have our USD non-farm employment change, which is an economic indicator that measures the net change in the total non-farm payroll employment in the US over a specific period. And again, this is one of the most closely watched economic indicators in the US, which has a direct influence on the value of the US dollar because, again, it provides an indicator on the labor market conditions in the US. And then lastly, we have our USD unemployment rate, which is a economic indicator that measures the percentage of the labor force in the US that is unemployed and actively seeking employment during a specific period. Again, also a critical indicator on the value of the US dollar, as it shows us the health of the US labor force as a whole. Now, these high impact news grouped together in today's session and in general NFP sessions tend to have a high probability to lead to high volatility in the market in specific USD and Canadian dollar currency pairs in the market. And this high volatility is something that, as a trader, I want to position myself in so that I can take advantage of the high volatility that happens when these economic indicators are released. And the purpose of that is to take advantage of the high volatility then leads to you as a trader being able to catch high volatile moves or make a lot of pips in less amount of time because of these high impact news and this high volatility that has a high probability to happen during these times. So the point in the session is to position myself in the market so that I can catch these high probable, high volatile moves and be on the right side of the market so that I can make a high amount of pips in less amount of time, which is exactly what the goal is as the trader. Make as much pips in as less time as possible so that you can obviously grow your account in the most efficient time possible. So for those of you that do trade on a regular basis and want to take advantage of the possible high probable moves that happen in the market during NFP, then I just want to bring your attention to the welcome deposit bonus from CWG Markets, which will allow you to double your trading capital, giving you more opportunities to increase your trading power and leverage your account so that you can grow your account in the most efficient way possible. So this CWG 100% welcome bonus is a 100% bonus on every deposit up to $1,000 on your live trading account with CWG Markets so that you can double your funds, increase your margin, and have instant credit to have more equity on your account to grow it in the most efficient way possible. So to do that, make sure you go to the CWG Markets website and go to your client zone and take advantage of this promotion when you are funding your accounts with CWG Markets. So just to summarize again, what we're going to be looking at is our high impact news for today, which is NFP, which will affect the Canadian dollar, employment change, CAD unemployment rate, USD average hourly earnings month on month, USD non-farm employment change, as well as the USD unemployment rate. Now, this, like I said, tends to have a high probability for high volatility on currency pairs that are directly related to the US dollar and the Canadian dollar. So in terms of our currency watch list, the currency pairs that I'm going to be focusing on in today's session will include our Australian dollar, US dollar, Euro USD, GBP USD, NZD USD, dollar CAD, dollar Swiss, dollar JPY, Euro CAD, GBP CAD, CAD JPY, AUD CAD, NZD CAD, as well as gold, XAU USD, WTI crude oil, which is US oil, as well as US 500, which is S&P 500, which is our US equity, as well as UT 100, which is NASDAQ, our US stock index, as well as the US 30, which is the Dow Jones. So we've got S&P 500, NASDAQ, and the Dow Jones, which are our US stock indices related to the dollar. Okay, so these will be the focus of today. So for those of you that are going to follow along with me and want to open your charts as well, then these are the currency pairs to be focusing on. Now, just a quick intro to the strategy that I'm going to be using for the session today. So this strategy is a strategy that consists of identifying high interest level, drawing high interest levels, and analyzing the markets at these key interest levels to look for confirmation of entry signals to position myself in the market to be in line with those high volatile moves that are highly likely to happen. Now, this strategy is suitable for traders that want to be trading high impact news, as well as traders that are intraday traders looking for intraday opportunities, but also swing traders that want to get in on low risk, high reward trading opportunities through our intraday trading strategies as well. So if you are any one of these 3 traders, then this could be a possible strategy that you could implement in the future. Now, when is the best time to use the strategy? The strategy is best used when you are trading high impact news, such as today, as well as if you're looking for intraday trading opportunities as well during the week in a normal trading session as well. Now, the strategy is a strategy that consists of 5 steps, which include identifying the high interest levels, drawing those high interest levels, analyzing the market and the price action at those key high interest levels that we've identified and drawn, looking for confirmation of entry at those levels, and then placing the trade using our specific trade order options to take advantage of those opportunities. This is the 5-step strategy. Now, what I will do is I'll go into these steps in a little bit more detail after, obviously, I've analyzed the markets, look for trading opportunities, and capitalize on those trading opportunities so you can have an idea of exactly how these steps work and why these steps were taken. So I'll go into these steps in a little bit more detail as after the high impact news has been released. So basically now what I'm going to do is I'm going to switch over to my charts, which is on MetaTrader. So I'm going to share another screen over here. So as I click on this and share my screen, what I will do here is I will share my trading charts, which I hope you can see right now. So these are the my trading charts and the trading side. We're going to be analyzing the markets, looking for trading opportunities. Now, like I said, the symbols that I'm going to be focusing on for this session will include AUD USD, which is Aussie dollar. We've got Euro USD, Euro dollar, GBP USD, the cable. We've got NZD USD, Kiwi dollar, USD CAD, dollar Swiss, dollar JPY, Euro CAD, GBP CAD, CAD-yen, Aussie CAD, Kiwi CAD, as well as XAU USD, which is gold, US 500, S&P 500. Then we've got UT 100, which is NASDAQ, as well as US 30, which is the Dow Jones Stock Index. And lastly, we've got US oil, which is WTI crude oil. These will be the main symbols that I'm going to be focusing on for today's session as well. So for those of you that want to follow along side with me on your charts and on your system, then I'll give you around a minute just to open up your charts so you can see exactly and follow along with me as well. So I'll give you around 30 seconds or a minute to do so that we can get cracking along and looking at analyzing the markets and looking for trading opportunities to take advantage of with our NFP session today. All right, perfect. So the first symbol I'm going to start with is going to be AUD USD, Aussie dollar. Okay. Right now, I'm on the 50-minute time frame. So what I'm going to do here is I'm going to start on the 4-hour time frame. And what I want to do is I want to identify my key interest levels of focus for the session today, which are going to be my potential supply and demand levels. And I'm going to be using my FX volume indicator at the bottom here to help me to identify these high probable supply and demand areas. Okay, so the first one I see is this one over here, which looks like potentially could be a potential supply level, because we can see a price starting to consolidate before slightly dropping down currently. So this could be a potential supply zone over here. But if I don't find anything here, the next potential level of supply will be around this level over here. So we've got a potential supply on January the 8th, 8 a.m. candle, and another potential supply January 8th, 1600 hour candle where price dropped down with high volume. So now that we have our potential supply areas, what I'm going to look for now is potential demand, which I'm going to go all the way down here to January 5th, 1600 hour candle where price pushed up with high volume over here, indicating a potential level of demand from this area over here. So this is all done on the 4-hour time frame. Then what I'm going to do is switch to M15, where I'm going to now start looking at drawing my levels, starting with January the 8th, and again using my FX volume indicator to do so. I'm going to use that to help me to identify the levels. So starting with this one over here, I see a potential clue over here, which price has already broken through, so that's no longer relevant anymore. The next clue I see is going to be over here, and then the next one is this one over here as well, which is the next clue. Then I see another 2 clues over here. Right, so that's going to be what I'll focus on for today. So now what I can see here is this first level over here. We've got another one over here, which I can see is no longer relevant since price broke that level. So I'll delete that one. And then the next 2 I see are these ones over here, which actually end up making what we call a zone. And just to not confuse you, what I'll do is I'll just add in a rectangle over here, just to see that this area is basically a zone. And we'll do this, extend this, so you can see exactly what I mean by that. So this is just a zone of supply. Okay, so basically what I have here, January the 8th, I've got the 2345 candle, as well as the 400-hour candle, and as well as the 330 candle. This is going to be my areas of supply where price pushed down with high volume. Now, moving along to the demand level, which I identified from January the 5th. So what I'm going to do on the 15-minute time frame is I'm going to scroll all the way over to January the 5th. Then from here, I'm going to start looking at potential clues for potential demand areas. I see a clue over here, which is no longer relevant since price has broken through that level already. Got another one over here, which could still be relevant, but no longer relevant anymore. I'm going to continue here and see if there's any other levels I can see. Now, January the 5th, there aren't any more levels. But if I scroll all the way to December 31st, I see a level over here and another one over here where price pushed up with high volume. So if I add this in over here, this level here, where price pushed up with high volume, still a relevant level, which is from December 31st, 1745 candle, where price pushed up with high volume. So this is going to be a level of demand. And then no other clues from here as well. So if we go back and have a look, that will be the first level of demand. Now, what I want to do is I want to go back to the 4-hour time frame, and I want to identify another potential demand just in case price breaks below this first level of demand here. Okay, so what I will do is identify the next potential demand zone, which seems to be all the way down here, December 22nd, 1600-hour candle. So what I will do there is go from M15 and back to, from H4 back to M15. I'm going to go all the way to December 22nd, and using December 22nd, then I'll use this to help me to identify the next potential demand, which if I scroll here, I see a few clues here. I see one clue here, December 23rd. Then seems like another potential one here, December 23rd. Then December 22nd. There's one over here. And I see two clues over here. And another one down here. And I'll just focus on those for now. So I'll add my line on this one. Add another one on this one. Add this one over here, which is pretty much the same level. So I'll leave that one out. Then add these two, these ones over here, which is pretty much the same level. And pretty much we have a zone over there. So I'll add in a rectangle again, just to not confuse you. So you can see exactly what level I'm looking at. Okay, so now if I go back here and have a look, so I've got December 23rd, 900 candle, 200 candle, and then December 22nd, we've got 2245, 1600, or 1630, 1645, as well as the 1500 hour candles where price pushed up with high volume. Now, if I go back to the current price action over here, now what I can see is, if I zoom out a bit, okay, I'll just focus on the most recent levels. As you can see, I have, there we go, I have my supply number one over here, then I've got supply number two above, as well as below, I've got my demand zone number one, demand number two, and demand number three. These levels here will be the level of focus for AUD USD for today's session as well. So if you guys want to have a look on your charts as well and align your levels on your charts as well, then I'll give you around 30 seconds to do so. So that is AUD USD, the levels to focus on for today's session. Aussie dollar. Perfect. Next up, what we'll do is move on to the next currency pair, which is going to be Euro USD. So Euro dollar, going to do the same, follow the same the same steps. So what I'm going to do is go to the 4-hour time frame, identify potential supply and demand levels. So I see a potential supply over here, and then demand will need to be somewhere back around here, which looks like will be around this level over here. Again, so demand, we're looking at December the 10th, 1600 hour candle, where price pushed up with high volume. And then supply, we've got January the 8th, 1600 hour candle, where price pushed down with high volume. Then I'm going to switch to M15, starting with January 8th, using my FX volume to help me look for clues, which I can see a potential clue over here, another one over here, which is still relevant. I see two over here, one over there, and I will just focus on, well, let me add another one, which I can see already all the way up here. Here's a few clues. So this one is the most relevant one. These ones not relevant anymore. Okay, so we have this first level here. This one over here. This one over here, which is pretty much like a zone. Then we've got this one here, and this up. So have 45, 5, 5 as 1500 and January 7 candles, all levels were pushed to levels of supply. Okay, so that is our supply levels. Now for our demand, what I'll do is we're going to go all the way back to December, which is December the 10th, to look for potential demand level clues. So I see a few clues here which don't seem to be relevant anymore. This one here still seems to be relevant, as well as this one over here, which is pretty much in the same area, and this one over here as well, which is in the same area as well. And then another clue all the way down here, and one clue down here, and one down here, and actually another one here. So starting with this one here, that's one level, another level over there, which is pretty much what we have like a zone. Then we've got another one here, which is in the same zone. So I'll leave that one out for now. Then I'll add this one over here, this one over here, which is in the same area, and this one over here also in the same area. And then this one here, no longer relevant since price pushed down from that level. So I'll delete that one for now. And yeah, we'll just focus on these levels for now, which if I delete the horizontal line, you can see we've got two zones over here. So again, I'll just add in this rectangle just to not confuse you, so you can see exactly what I'm talking about, as well as this one over here as well. So these two here. So these will be our two zones of demand. And then I'll delete this one since it's no longer relevant. So we have December the 10th, 2025, 1745 candle, 1645, 245, 045, as well as the 2345 candles, which give us our demand zones, which are areas where price pushed up with high volume. So now, if I go back and have a look here, as you can see, euro dollar, we have our demand level or demand zone number one over here. Then we've got demand zone below that. Then above, we've got supply number one, supply zone number two, supply zone number three, and supply number four. So again, let me add these here so you can see the zones and not be confused. So there we go. That's the first one. I'll add it in again. That one, then this one over there, that one over there. So that's supply zone 2, supply zone 3. Right. Again, this will be the levels of focus for euro dollar for the session today. So I'll give you about 30 seconds to align these levels with your charts and your system as well. So if you want to follow along with me, you can see exactly which levels I'm looking at. This is euro dollar. Perfect. Next symbol we'll look at is GBP USD. So GBP USD. GBP USD will be the next one we're going to look at. Okay. Right, so GBP USD, we're going to go from M15 to H4, do the same thing, identify potential supply and demand areas where we're going to use as focus for the session today. Right, so we have potential supply here on January 8th, 1600-hour candle, another potential supply January 8th, 1200-hour candles, where price pushed down with high volume. And then demand below, we have January or December 22nd, 8 a.m. candle, where price pushed up with high volume, giving us a potential level of demand. Then going to M15 to draw the levels. So M15, starting with January the 8th, we have, again, another clue here, one clue over here, which is no longer relevant, same as another one over here, also not relevant anymore. So we'll leave that one and potentially look at the next clues we have, which is one up here, and then another clue up here. Then there's actually a few more clues that I can see, which starting with this one here. We've got this one over here, this one here, this one here, and this one over here as well, which we'll just focus on those for now. So here's the first one. We've got another one here. So we've got a zone there, another one here, this one over here, which is another zone, and then this one here, which is part of the zone, same as this one here. So what I'll do, just to not confuse, is I'll just use the top of this one, and then I'll take this one off, put it up here, and then this one I'll move up here. Again, just so that you're not confused. And then basically what we'll have is between this level and this level is a zone, and got between this level over here and this level over here is another zone. So doing this, we'll add this over here, then we'll add this one over there, and basically what you'll see is we have January the 8th, 2345, 1000, 515, 045 candle, and then January the 7th we have 2245, 2200, 2100, as well as 1700-hour candles, or are areas where price pushed down with high volume, giving us potential or giving us our supply zones for the session today. Now what we're going to do is move on over to December to identify potential demand levels. So I'm just going to identify our low here for the day. Then I'm going to switch over to December, and I think it's December the 22nd. Yes, so December 22nd, I'm going to identify potential levels. So we've got a level here which is no longer relevant. We've got another one here which is still relevant. This one here also relevant. Then this one here, and this one over here. There's another one here. So it seems like we may have a zone. So these ones here not relevant, and then this one here, if I have a look, yeah, not relevant anymore. So we'll start with this one here. That's the first one I see. Then there's another one here, which is in the same level. This one here, which is below, giving us a zone. Then we've got another level over here. Another one here. And then this one here, which we can see is part of the zone. So I'll do this again, just to not confuse you. We'll just focus on the main ones over there. So we've got the one zone here. Then we've got another zone over here. And then I'll just extend this. Again, not too confused. And yeah, there we go. So that is our zones here. So December 22nd, we have the 545 candle, 330 candle, 300 candle, as well as the 1 a.m. and 030 candle. Then December 19th, we've got 2245 and 2345. All are zones where price pushed up with high volume, giving us our demand levels. So now if I go to the current price action and have a look, as you can see, we have here our supply zone number 1, supply zone number 2, supply number 3 and 4, and then demand zone 1 and demand zone number 2 below over here. And these are the levels to focus on for GBP USD for today's session. So give you some time to align your levels with mine so you can follow along with me for those of you who have your charts open at the moment. GBP USD. Okay, perfect. Next is Kiwi dollar, NZD USD. So NZD USD. Right, NZD USD. Okay, NZD USD, starting on the 4-hour time frame, identify potential supply and demand levels. Potential supply and demand levels. So here it seems like I'm going to need to zoom out a bit and have a look here. So what we have is potential supply, January the 8th, 1600 hour candle, where price pushed on with high volume. And then our next most recent demand is December the 2nd, 1600 hour candle, where price pushed up with high volume. This is on the 4-hour. Now going to the 15-minute time frame, starting with January the 8th, we've got a potential level over here, which is no longer relevant since price broke through there. The next potential level I see is this one here, another one over here, and this one over here, and next one is this one here. Okay, so here's the first level, another level here, this one over here, which is a zone, then this one all the way up here. So for the zone, add in this one, extend it so you can see. So December the 8th, we have 8:15 candle, 0:45 candle, and January the 7th, 23:45, and 1700 hour candles, all are levels where price pushed down with high volume. Then the next level we're going to look for is potential demand, which was all the way in December the 2nd, and here we can see potential clues, starting with this first one here, which is no longer relevant since price broke through that level already. The next clues I see is this one over here, which is no longer relevant, and this one here, no longer relevant. So what I'm going to do is continue here and see if I go to November 28th, 2025. I do see a few clues here. Here's one over here, another one here, and another one here. And basically, you've got a potential zone here, starting with the bottom of the zone, which is this one here. And then you've got this one, and here's the top over there. Okay, so add this in, just so you're not confused. Then, as we can see, we have December or November 28th, 12:30, 13:30, and 1500 hour candles, all levels where price pushed up with high volume. Okay. Right, so if we go now back to our current price action that we can see here on NZD USD, what we can see here is we've got supply number 1 here. So supply number 1, then supply zone 2, supply number 3, then we've got demand zone 1 and demand number 2 directly below it for our demand levels. So these are going to be the levels to focus on for NZD USD for today's session. I'll give you 30 seconds to align your charts as well. All right, perfect. Next is going to be USD CAD. So USD CAD, starting on the 4-hour, identify potential zones. So we've got a potential demand here. And for supply, will look like I need to zoom out a bit. And the next supply seems to be all the way up here. So supply, I'm looking at December the 5th, 1600 hour candle, where price pushed down with high volume. And then demand is January the 8th, 1600 hour candle, where price pushed up slightly after consolidating with high volume. Then switch to M15, starting on January the 8th. Looking for some clues. I see a clue over here, another one over here, this one over here. Then I see another big clue down here. Let's see if it's still relevant. So first level, this one here. Second level, this one here. Then this one here, not relevant anymore. And this one here, pretty much in the same level. Okay, so do that, delete that one. Then obviously the next one I'll look for is all the way down here, these two here, this one here, as well as this one down here. So this one here, this one here, and then this one not relevant anymore. All right, so basically what we've got here. The first level here, which is a zone of demand. So we have January the 8th, 23.45 and 17.45. Then Jan 7, we've got 23.45, 17.30, 1700, and 16.30. All are levels where price pushed up with high volume, giving us demand. Now for supply, we need to go all the way back to December the 5th. And again, we're looking for areas where price pushed down with high volume. So here we have this level over here, this one here, which seems to still be relevant, and the next level all the way up here, and this one here. Right, so first one here, second one over there, third one there, and this one over here, which is a zone. Right. Right. So December the 5th, we have 1630 candle, 1530 candle, 030 candle on December the 4th, and 2345. Well, 030 candle December the 5th, and 2345 December the 4th. All are areas of supply where price pushed down with high volume. So now if I go back and have a look, I can see here dollar CAD. I have my zoom in a bit here so you can see. All right, zoom out a bit. Okay, so we've got supply number 1 over here, and then supply 2 and supply zone 3 all the way up there. Then we have our demand zone number 1 over here, demand zone number 1. Then demand 2, 3, and 4 all the way at the bottom over here. Okay, so these will be our levels for dollar CAD for the session today. So I'll give you a few seconds to align your charts if you're following along with me. Perfect. Next, USD CHF. We have 4-hour time frame, potential demand over here, then potential supply will be all the way over here around. We'll have a look here as well as over here if we don't find anything. So December the 10th, 2000 candle, December 11th, 800-hour candle, potential supply levels, and then demand, January 8th, 1600-hour candle, where price pushed up with high volume. Then we go to M15, starting on Jan 8. See potential level here, no longer relevant. This one over here, then these two, these ones over here. This one over here, not relevant anymore. I see this one over here, which is still relevant. Okay, so first level here. This one, not relevant anymore. This one is still relevant. And this one down here, also still relevant, which can see. Then we have another one down here. So first here is the zone. All right, perfect. So January the 8th, we have 1745 candle, 1545, 1530, as well as 2045. All areas of demand where price pushed up with high volume. Now for supply, we go all the way to December, starting with December 11. See if we have any clues here. So December 11th, we may have a clue here, which I'll need to see if it's still relevant. So the clues, actually this one up here, then we've got a level here and a level here. So this one here and this one here, which is the zone. Okay, extend that so you can see. So basically we have December 11th, 10 a.m. candle, December 10, 2130, and 2100. All are levels of supply where price pushed down with high volume. Now, if I go back in time and have a look, okay, we can see this level still relevant here. So I'm going to zoom out a bit so you can see. I'll just do this here. So basically we have supply number 1, supply number 2 here. Then we've got demand number 1, demand zone below, demand 2, and demand number 3 on USD CHF. All right, perfect. So USD CHF, these are the levels for today. Next, I'm going to move to USD JPY, go to the 4-hour, identify potential levels. I see one over here of demand, and then supply. Supply, we could have a potential level here, but we'll just have to see on the lower time frame. So we've got December 19, 1600-hour candle, and then we've got January 8th, 1600-hour candle where price pushed up with high volume. But what I want to do though is, in case we don't find another level there, I'm going to see if there's a potential one over here, which seems to be this one all the way up here, which is from November the 20th, 1600-hour candle where price pushed down with high volume for potential supply. Okay, so 15-minute time frame. Starting with some clues on the January the 8th. I see one here which is still relevant. See another one here which doesn't seem to be relevant anymore. Then this one down here, which is still relevant. These two here, this one here, and any other one for the day, not relevant. So we'll just focus on those for now. So that's the first level. Okay. Second one here. These two over here. And these ones pretty much in the same exact level. So I'll just delete that, not to confuse. Basically, this here, zone. So December the 8th, we have 23.45, 15.30, 1000, and 9.45, all levels of demand where price pushed up with high volume. Okay, so that is our demand. Next, what we're going to do is look for supply, which means we need to go all the way back to November the 20th to look for areas where price pushed down with high volume, which there are some clues here, which this one is still relevant. Okay, so that's fine. This one, not relevant anymore. Same with this one, and this one, not relevant anymore. So basically what we have here is November the 20th, 1745 candle, supply level where price pushed down with high volume. Then we did identify another supply, which was all the way in November the 19th. And November 19th, I don't see any relevant clues here. I do see this level, which may be part of a potential supply zone. So let me go back to here, which is okay. So if I go back in time, I just want to see here. Okay, still seems to be a relevant level with this one. Okay, so yeah, still relevant. So what I'll do is add in the zone over there, which will be this one here. So this will just be like a zone. Perfect. So that's the supply zone over there. But since the prices at this level, what I do want to do though is identify the next potential supply back on the 4-hour in case price breaks above this current level at the moment, so that I am at least 2 steps ahead. So what we have here is all the way up here, which is around 13th of Jan 2025. So if I go to the 15-minute time frame, see if I can jump all the way to January 2025, which I can. So the next potential supply is, I see 15th of Jan, a few levels here. This one's part of the zone. And the next one, yeah, those aren't relevant anymore. So the next level I see is this one here and this one here, which is another zone. All right, so January 15th, 2025, 200 and 245 candle level or zone of supply where price pushed down with high volume. So now if I look at the current price action, all right, what we can see here is supply number one here. So here's supply number one, supply zone number two, demand one, demand two, demand zone number three for USD JPY. So I'll give you a few seconds to align your levels with mine, for those of you that are following alongside with me. Perfect. Next is EuroCAD. So EuroCAD, H4, identify potential supply and demand levels. We've got a potential supply over here and a potential demand down here. Demand, which is January the 7th, 1600-hour candle, where price pushed up with high volume, and supply, January the 8th, 1600-hour candle, where price pushed down with high volume on the 4-hour. Then we go to M15, starting with January the 8th, looking for potential clues. I see one clue over here, which is actually still relevant. Then I see another clue over here, another one over there. Then this one here. And the next clues I see is this one down here, this one down here, and this one here, which is no longer relevant. However, I see this one over here. Okay. So first one is this one here, which is still relevant. This one here, still relevant. This one here, no longer relevant. This one here, still relevant. So I will delete this one. Then continue. This one over here, still relevant. And this one here, relevant. Then we've got these two over here. So we've got a zone here and a zone here. And then for the zones, just extend it so you can see. So January the 8th, we've got a level here, 2330, 1730, 1530. 1700, which is January the 7th, 1630, which is January the 7th, and January the 6th, 1700, and 1630. So we have here a level of demand here, a zone of supply over here, a demand over here, another demand here, and another demand zone over here. Okay, so we've got quite a lot happening here on January the 8th. Now for the other levels, which I think would have been, actually we didn't identify. So what I'm going to do is I'm going to go back to the 4-hour here, and for another potential supply level in case price breaks above the zone here, the next supply I can see will be this one over here. Yeah, potentially there's an area over here on December the 5th, 1600-hour candle. So if I go to the 15-minute time frame and have a look. Okay, I think that's the problem there. Is I need to go to the 30-minute time frame. So I can't see anything on M15. And what I see here is January the 5th. What I want to do first is put this over here so I can see the highs. Then go back to January the 5th on the 30-minute time frame. Which is all the way up here. And yep, I can see a clue over here where price pushed down with high volume. That will be the next level of supply, which is December the 5th, 1530 candle on the 30-minute time frame, which is a supply level where price pushed down with high volume. Then I'm going to go back to M15, go to the current price, and as you can see, we've got, I missed this one here, another zone. Okay, another zone over here. So right, so basically, let me fix this one. This is not right. It's over here. Okay. So basically, as you can see, what we have here is demand zone number 1. Okay. Demand zone number 1, demand number 2, demand zone number 3 below. And then we have supply zone number 1, and then supply number 2, which is, where is supply number 2? So supply number 2, let me go back and see, it's all the way up here. What I want to do is, just so that I can see it, let's go back over there and do this. Yep, there we go. So I'll zoom back in. We have demand zone 1, demand 2, demand zone number 3, supply zone number 1, and supply number 2 all the way at the top over there. These will be the levels to focus on for EuroCAD. Give you a few seconds just to follow along on your side as well. Okay. So that's EuroCAD. Next is GBP CAD. So H4 for our time frame to identify potential levels. So here's one here, which could be potential supply. Another one here, another potential supply, and then demand. This one down here. So demand, January the 5th, 1600 hour candle. Supply, January the 8th, 1600 hour candle, and January the 8th, 8 a.m. candle. So we go to M15, draw the levels, starting with Jan 8. So first clues I see are these ones, which are not relevant anymore. This one here, not relevant anymore. This one here, still, well, no. This one here, no longer relevant. This one here, not relevant anymore. Same with this one. These two still relevant. Then this one here and this one here still relevant, and this one no longer relevant. So got one level here, another level here, then we've got one level over here and another level over here. So Jan the 8th, we've got 1400, 1345, 1030, 1000, all levels of supply where price pushed down with high volume. Then for demand, we go all the way to the 5th of Jan and looking for clues. Here's one here, another one here, which is no longer relevant. This one here, this one over here, this one down here, and this one down here. So okay, so that's the first one, second one, third one, which is a zone, and then the fourth one here, and this one down here, which this one is not relevant anymore, but I see this one down here. Okay, that's the more recent one over there. So that is going to be the zone. Okay, so the levels we're looking at here are January the 5th, 1630, 1545, 1500, 1000 hour, as well as 515, all levels of demand where price pushed up with high volume. So if we go back now and have a look, we've got EuroCAD, where we have supply number 1, 2, 3, and 4, and then demand zone number 1 at the bottom over there, and demand 2 and 3 below. But the more recent levels are these ones over here. So these are the levels to focus on for GBP CAD. I'll give you a few seconds to follow along. So you can align your levels with mine, GBP CAD. Perfect. Next is CAD JPY. So CAD JPY, start on the 4-hour time frame, identify potential levels. I see a potential demand down here, a potential supply all the way up here, which if not relevant, the next one I see is all the way up here. So supply, January 6, 800 candle, January the 6th, 1600 candle potential supply where price pushed down with high volume, and then demand, we have January the 8th, 1600 hour candle as well. So M15, identify levels. So I see a level here, not relevant. This one here, not relevant anymore. See one down here. Then I see another one here. So all the way down here. Okay. Okay. So we have 945, 1000, and 1030 candles, demand levels where price pushed up with high volume. Now for supply, we'll go all the way here to January the 6th. See if we have any clues. We do have a clue here. I don't know if it's relevant still, so I'll have a look. There's this clue here. This one not relevant anymore. This one not relevant anymore. Okay, we've got this one here, still relevant. These two over here, that one's not relevant anymore. So we've got this one here, which I'll have a look at. Then the next one is this one over here, and this one over here, which both are a zone. So Jan 6, 1700, 245, and 230 candle. Okay, so this one is still relevant since it seems price is consolidating at this level. So we have supply number 1, supply zone number 2, and then demand number 1, zone number 1, demand number 2 below over here. And these are the levels that I'm going to be focusing on for CAD JPY. If you're with me so far, you can align your levels as well. And I'll give you 30 seconds to do so. Okay, perfect. Next is Aussie CAD. So go to the 4-hour chart, identify, we have a potential supply here, and then a potential demand over here. Demand, January the 6th, 1600-hour candle. Supply, January the 8th, 1600-hour candle over there. So go to M15, draw levels. Got a level over here, which is no longer relevant. Then the next clues I see is this one here, which is no longer relevant as well. And we've got another level over here, not relevant anymore. So the only one I see is this one over here, which is still relevant, which is all the way up there. January the 8th, 4 a.m. candle with price pushed down with high volume. Then for demand, we'll need to go all the way back to January the 6th to look for clues, which I see a clue here still relevant. This one here also still relevant. Same with this one, which may be a zone over there. And then these two over here, which may still be relevant. This one over here, not relevant anymore. This one over here, and this one here, still relevant. So first level, this one, second level, pretty much in the same area, third one just below, so it'll be the zone. Next one here, not relevant anymore. Then these two here, still relevant, which is another zone. So here's the first zone here, and the second zone over there. Both are zones of demand where price pushed up with high volume. So January the 6th, 245, 300, 1500, 1545, 1630. Levels of demand. Now, if we go to the current price and have a look, so as you can see, we have demand zone 1, demand zone 2, supplier number 1 at the top over there. And we'll just focus on these levels for now for Aussie CAD. So if you're with me, I'll give you a few seconds to follow along as well. Next is NZD CAD. So 4-hour time frame. Okay, we've got potential supply there. Another demand over here. So demand is January the 1st, 1600-hour candle, and supply January the 8th, 1600-hour candle. Then we go to the 15-minute chart, identify the levels. This one over here, no longer relevant. I don't see any other zone over here. So we might need to go back further in time. So that's for the supply. I'll delete this one for now. Oh, well, let me first start with the demand. So the demand is this one here. Well, we'll need to go all the way back to here, which is January the 5th, which we have a clue here, still relevant. This one here, another one down here, this one down here as well, and this one here, which may be a zone. So here's the one, second one here, third one down here, fourth here, fifth, and sixth, which is a zone. Okay, so Jan the 5th, 045, 300, 1000, 1500, 1600, and 1630. All levels of demand where price pushed up with high volume. Now for supply, I'll go back here and have a look. For supply, what I'm going to do is go back to the 4-hour chart and identify the next potential supply level, which could be somewhere above here, starting with December the 23rd, 8 a.m. candle. And then if I don't find anything, I'll need to go all the way back to December the 10th, 2025, 1600-hour candle where price pushed down with high volume. So M15, starting with the first one, which is December 23rd. See if I see any clues here. So the 23rd, I see a clue here, which is not relevant anymore. This one, not relevant. I see another clue here, and this one, not relevant. Then another one over there, not relevant at all. But just to make sure, especially with this one, over here. I just want to have a look and see if maybe it could still be relevant. So go to the end here and have a look. Yeah, this one is still relevant. It seems price is consolidating at that level. So if I go back to that area, it's December 24th, 5 a.m. candle where price pushed down with high volume. Meaning, if we go over here, then this one then is also still relevant since it's a zone as well. This is December 23, 10:45 candle. Okay, that is December 22nd. But if I move this a bit higher, the next level here will be as identified on the 4-hour, December 11th. Okay, then so what I see here is December the 12th. See if there's any clues first. Yeah, so December the 12th, there is a clue over here and over here where price consolidated before pushing down. So that's one over here. Okay, and then December 11, there's a clue here and a clue here as well, where price pushed down with high volume, which is another zone that I'll focus on for now. So here's the one zone. Here's the next zone over there. So December 11, 15:30, 16:30, December 12, 2:30, and 2:45. All levels of supply where price pushed down with high volume for supply. Okay, so now that we've got our levels, we go now and have a look. Well, the first one here I forgot to add is a zone over there. This one here. So there we go. So what do we see here? We have okay, so we've got demand zone number 1 here. Kiwi Cat, demand zone number 1, demand number 2, 3, and demand zone number 4 at the bottom. Then supply zone 1, supply zone 2, and supply zone 3 at the top over there. Okay, so these will be the levels to focus on for NZD CAD for today's session. So take a few seconds to align your levels as well for NZD CAD. Then I'm going to move on to the last few symbols, which will be the first one, XAU USD, gold, so go to the 4-hour and have a look here. So potential demand here, then supply is this one over here. So supply is Jan 7, 500 candle, and Jan 8, 1300 candle for potential demand. Then if Jan 7, I don't find anything, we still have this level next to it, which is Jan 7th, 1 a.m. candle. Right, so M15. Starting with this clue here, not relevant. This clue here, still relevant. This one here, not relevant. This one here, still relevant as this one, and this one here as well. And then this one here, not relevant. So that's the first level. Second level. Next level, which is literally same level, so I'll leave that one out. And then the next level down here, which is part of the zone. So January the 8th, we have 2115, 1630, 1500, and 1400. All levels of demand where price pushed up with high volume. Now for supply, just going to go all the way here. So supply, we have this level over here, which if I have a look is not relevant anymore. Then we've got this one next to it, not relevant. This one, not relevant. This one here, still relevant there. I think we may have a zone there. Then we've got this one here. And yeah, those are all the levels for now. So here's the first one. Here's the second one. So Jan 7th, we have 330 candle and 300-hour candle levels of supply with price pushed down with high volume. So now if I have a look here, okay, delete this one here. So basically what we have on gold is we have supply number 1 here, supply number 2, and then we have demand number 1 here at the bottom, demand zone number 2 below. So these will be the levels to focus on for gold, XAU USD. So take a few seconds to align your charts before we move on to the next one. Okay, gold. Right, moving along, we have S&P 500, US 500. So we'll start on the 4-hour chart. We have potential demand here, potential supply over here. Very clear to see. So Jan 8th, 1700-hour candle demand, Jan 7th, 1700-hour candle for supply. So we go to M15, identify the levels, which I see a few clues here. This one, yeah, this one is still relevant. Wait, let me see. Yeah. Let me just do this first. Yeah, actually, what we have is this zone over here. So I'm going to delete this one since price is broken below it already. So that over there, I see another one over here, which is part of the zone. This one down here, as you can see. Then what I want to see is I see another one down here, which is also part of the zone. So basically, we've got that there. And then January the 8th, we have 8 a.m. candle. Wait, no, this one's not relevant anymore because price broke below. Okay, so we've got 1000 candle, 1630 candle, as well as the 1645 candle, where price pushed up with high volume. Okay, and then for supply, as you can see, got a clue over here, which is no longer relevant. This one here, no longer relevant. We've got a spike over here, which is relevant currently. Then this one over here, and this one over here, which is also relevant. So here's the first level, which is the supply, second level, third level on US 500. So basically, what we have over here, since we are having a look, is we have supply number 1 over here. That's supply number 1. And then we've got supply 2, supply 3, and then supply 1, 2, and 3, demand number 1 at the bottom, and demand zone number 2 at the bottom for S&P 500, US 500. Okay, so take a few seconds to align your charts with mine. Before we move on to the last 3 currency pairs for the session today, which is going to be, next one is NASDAQ UT100. So we're going to go to the 4-hour chart, identify potential demand here, identify potential supply over here. Supply, January the 7th, $1,700 candle. Demand, January the 8th, $1,700 candle, where price pushed up with high volume. Then we switch to M15, draw levels. So here's the first level here, next level here, which is a clue, which is no longer relevant. Then another level here, no longer relevant. This one, not relevant anymore, so delete that. Then we've got this level here, not relevant anymore. But I do see this one here and this one over here. Okay, so here we've got the first level of supply, another level of supply here, another one. So January the 7th, we have 2115, 2230, then January the 8th, 1630 candle, where price pushed down with high volume for supply. And then demand, I need to go back to the 4-hour chart, identify the next potential demand level, which is all the way over here, January the 5th, $1,700 candle, where price pushed up with high volume. So there we go. So go here, then go to January the 5th, which I see a clue here, a clue over here, another one over here. These levels not relevant anymore since price broke through there. This one here, if I have a look, if it's still relevant, let me see. Yeah, price was consolidating at that level. So that's going to be the first one over there, meaning that this one over here will still be a relevant level since it's going to be part of a zone. Okay, there we go. And then the next one below will be this one down here. So we've got January the 5th, 1000 hour candle, January the 6th, 1015 and 1630. All levels of demand where price pushed up with high volume. So now if I look here, this level and this level is going to form part of the zone over there. Okay, there we go. So UT100, we have supply number 1 here, supply 2, supply 3, demand zone number 1, and demand number 2. Okay. And do this. So this will be the levels of focus for today. Take a few seconds to align your levels with mine on UT100 before we move on to the final 2 pairs of the session here. Perfect. So we've got next US 30. So I'm going to go to the 4-hour chart. We have demand here and supply. Supply Jan 7th, 1700 hour candle. Demand Jan 8th, 1700 hour candle. M15. Draw levels. Here's the first level. Here's the next level, which is still relevant over there. So this one is still relevant. And then this here below also still relevant. So January the 8th, we've got 1630 candle and 2245, both levels of demand where price pushed up with high volume. Then if we have a look for the supply here, supply is this level over there. See a clue over here. These ones not relevant anymore. So we go here and have a look. This is another potential clue. So Jan the 7th, we have 1630 and 1945. So basically what we have here is we have demand number 1, or supply number 1 here, supply number 2, and then demand number 1 and demand number 2 below on US 30 Dow Jones. So you can align your level with mine. And then we're going to move on now to the last level, or the last symbol that we're going to look at for the session today, which is US oil, WTI crude oil. So for our time frame, we have a potential demand over here. We have potential supply up here. So demand, Jan the 8th, 1700 hour candle. Supply, Jan 6th, 1300 hour candle. We go to the 15-minute chart on Jan the 8th. Then have a look here. We have a clue over here, not relevant anymore. Another clue here, still relevant. And one below that one. Then we've got this one over here, not relevant anymore. Same with this one. This one here, still relevant. And then finally, this one down here. So here's first one, next one, this one here. I'll fix this one here. Then this one below. Okay. So Jan 8, we have 10, 15, 1500, 2100, 21, 15. All levels of demand where price pushed up with high volume. Now for supply, we'll head over to January the 6th and have a look. We have a clue over here, which is no longer relevant. And then we've got one next to it, which, let me have a look here. Yeah, is still relevant. So I'll take this, put this up here. And then these ones not relevant anymore. But delete that one. So this is January the 6th, 1645 candle where price pushed down with high volume. Now, what I will do is go back to the 4-hour and have a look just in case price breaks above the current level. I want to see where the next potential supply here is, and we do have a clue here on December 26, 9 a.m. candle where price pushed down with high volume. And then the next one is December the 9th 1 a.m. candle where price pushed down with high volume. So let's go back to M15. You start with the first one here, which is December 26. And December 26, well, firstly, what I want to do is have a look here and see. I'll need to move this one slightly up and then go back to December 26. And then we can have a look here, see if we have any clues. So this one here, not relevant anymore. This one here, not relevant anymore. We go to December 24th. Nope, nothing there. So delete that one. And then go to the December 9th. December the 9th, which we have a clue over here from December the 10th. Okay, and the next clue is up here, December the, yeah, so December the 9th, 12:30 candle, and December the 10th, 300-hour candle. Levels where price pushed down with high volume. Okay, so now, if we have a look, seems like we got a zone over there, which is perfect. So I'll just add this here. Then we'll do this. And this. And then what we have is our zones, which now, if we look, we have supply zone number 1 here, supply number 2, and then demand zone one, and demand number 3. Big. Okay. Perfect. Okay, so those are the levels for US oil. Take a few seconds to allow. Now what we're going to do is I'm going to start looking at placing some trades based on the levels I've identified and drawn using the 5-step strategy breakdown. To complete the strategy breakdown is to analyze and take some trades. Okay, so again, we've got US oil, US 30, UT 100, US 500, XAU, USD, NZD CAD, Aussie CAD, CAD JPY, GBP CAD, Euro CAD, dollar yen, dollar Swiss, dollar CAD, NZD USD, GBP USD, Euro USD, as well as AUD USD. These are going to be the symbols of focus for placing trades. So now what I'm going to move on to now is actually placing some trades. So first one to look at is AUD USD. So Aussie dollar, if we have a look here, is currently in no man's land. So high probability setup is rather to wait for price to come down, test the demand level to look for potential buying opportunities. But for now, there's no trade on Aussie dollar. Okay, so that's AUD USD. Next is Euro USD, which I do have a trade that I want to take. Since price is currently testing our demand level, I'm going to place a buy stop pending order. Since price is consolidating at the demand, with the entry price at the most recent fractal high and stop loss at the fractal low just below the demand zone number 1, where the entry is around 1.1648 and stop loss is around 1.1634 on Euro USD. A buy stop pending order is what I'm looking to take here on Euro dollar. Yeah. Okay. So that's Euro USD. Next is GBP USD, also in no man's land right now at the current moment. Okay, so no clear direction as to which level price is highly likely to test next. So that's going to be a no trade for me. Rather wait for price to either move up to the supply or down to the demand before looking at taking any more trades. So no trade for now. Next is NZD USD. So NZD USD is no trade for now. Because it's currently in no man's land. So no trade there. We'll check on this one later. Next is dollar CAD. So USD CAD also in no man's land. No trade currently at the moment. High probability setup, it seems, is for price to come up and test the supply before looking for potential opportunities at the supply level. But for now, no trade. Next is dollar Swiss. Dollar Swiss currently testing the supply zone over there. So that's going to be a sell opportunity since price is consolidating at that level. I'm going to look at placing a sell order, a sell pending order with entry price at the bottom of the range, stop loss top of the range over there, which is basically for this sell stop order. Its entry price is around 0.7991 and stop loss 0.8005 on dollar Swiss. Sell stop order, pending order on dollar Swiss. Okay, so that's USD CHF. Next is dollar yen. So dollar yen USD JPY. I see price came up to test the supply zone over there. So what I'm going to look at placing is a sell stop order as well here on dollar yen. Okay, where entry price on the sell stop order, stop loss will be just slightly above the supply zone over there, and then entry price will be the most recent fractal low down here, giving me a 33 pip entry to stop distance. So basically on USD JPY, what I'm looking at is a entry price at this level 157.52 and stop loss 157.85. All right, so that is dollar yen. Next is EuroCAD. EuroCAD I'm looking to buy here. Okay, since price is testing our supply zone over there, what I want to do is place a buy stop order on stop loss below demand zone over here. Entry price is at the most recent fractal high there already, which is at entry 1.6165, stop loss 1.6142. Okay, there we go. I do see another clue as well for potential sell, which I think I'm going to look at taking. So this is more of an advanced trade. Okay, which needs to be, the risk needs to be managed accordingly, since we can see prices consolidating between supply and the demand there. But if we have a look at what's happening right now, is prices within our entry zone for a potential sell, which if I look here, sell stop order with the entry price at this fractal low over here, the first fractal low that came off the supply level earlier on in the session, and then stop loss will be the fractal high above supply number one here. Okay, so this can be a sell stop order with entry at 1.6158 and stop loss 1.6177 for a sell stop order. Okay. All right, so the next symbol to look at here will be GBP CAD, which is currently testing the supply level as well, giving a potential sell setup. with seems here the entry, well, stop loss, sell stop order, stop loss, fractal high just above supply number one. But the entry I'm going to use would be this fractal low, first fractal low after price tested the supply level earlier on in the session. So entries at around 1.8626 and stop loss 1.8642 on GBP CAD. Okay. Next is CAD JPY, testing the supply over there as well. But it's already moving off the supply zone there. So what I will do is I'll put in an order just in case price pushes back up into the supply zone with, again, stop loss at around the fractal high above the top of the range there, which is at 113.73. And then stop entry price will be over there, the bottom of the range, which is this fractal low here at 113.57. But for now, not going to place a trade, rather wait for price to come back into the zone. Okay. Then Aussie CAD is setting up a buy setup there. Aussie CAD setting up a buy setup. So I'm going to take that one since price is testing the demand over there. I'm going to do this, buy stop order with the entry price on the most recent fractal higher and stop loss just below the demand zone over there, with the entry at around 0.9276, stop loss 0.9254 on Aussie CAD. Okay. Next is Kiwi CAD, also testing the demand there. So I'm going to take a buy stop order there. So entry price, most recent fractal high there, which is the top of the range as well, and stop loss bottom of the range, which is also the most recent fractal low. So entry 0.7949, stop loss 0.7940 on NZD CAD. Okay. Next is gold, which is testing the supply there, looking for a sell position. Since price is consolidating there, with my stop loss on the most recent fractal, I'll use the most recent fractal high, and entry the most recent fractal low, which is also around the bottom of the range over there. Actually, I'll use this fractal low here, which is the bottom of the range. So entries at around 4,456 and stop loss is 4,482 on gold for the sell stop pending order. Okay, so that's gold. Then the last ones we have here is US 500, which is S&P 500, giving a sell there, set up with stop loss will be the fractal high above the supply level, and entry price, the most recent fractal over there for the sell setup. So entry is at around 6,921 and stop loss 6,936 on S&P 500. Okay, so that's S&P 500. UT 100 is still in no man's land, hasn't tested the supply yet, so no trade for now. We'll look at this one later. And then lastly, we've got US 30 testing the supply as well, but not giving a clear sign of entry. So I'm going to leave this one for now and potentially see what happens there. And then oil, also no man's land, so no trade for now. Okay, so those are the trades for now. And then basically what we'll do is wait for the news to be released. So I'm going to do this. Go here. Then we'll just have to wait and see. Okay, markets have, news has been released. Okay, now it's just about monitoring any trade setups we have over there. Okay, again, make sure you manage any open trades that you have accordingly. Okay, JPY might have a look at. Okay. All right. So keep an eye on any open trades that you have. Looks like there's some deep reversals. So if there are trades that are in profit and you're happy with those profits, then it's up to you to manage your profits accordingly. Okay, yeah, there's some big reversals happening, but that's just trading. So let's have a look here. Keep an eye on any potential orders we have. Okay, Kiwi dollar, we're going to have to update this one. I did hit stop loss, so I still see a potential valid setup, but we'll need to wait for this candle to close before placing the next trade over here, which looks like it will be around over there. Okay, but we'll get back to this one. Same with gold. Gold is fine actually. US 500, we're going to need to update this one. So we're going to delete this pending order. Entry price will still be the same, but stop loss needs to change. So I'm going to delete this pending order. I'm going to set up the next potential sell stop that's going to potentially happen with the entry price still at the same level. Okay. And then stop loss we'll see on the close of this candle, but should be somewhere around here. UT 100, as you can see, has finally hit the supply level there. So that's another potential sell trade setting up. So I'll use this fractal high for potential stop loss and potentially this fractal low for potential entry, but we'll need to wait for this current candle to close for placing any trades on UT 100. Then US 30 looks like it's setting up as well, which now I can see with the current candle to give a potential setup for a potential sell stop. Only though we'll need to wait for this candle to close, but I'm looking at somewhere over there. Then oil, no trade right now. It's currently in no man's land where either need to wait for price to come up and hit the supply to look for potential selling opportunities, or look for price to come down to put the potential demand to look for buying opportunities. But since price is in no man's land, it's a no trade for now. Then we've got Aussie dollar starting to move up here. So now looks like the next highly likely setup is, again, since it's no man's land currently, for it to either come up to the supply level to look for potential selling opportunities over there. So that's that. Euro USD, okay, has triggered already. What I want to do is, once it gets to around break even, I want to, it's at break even now. I'm going to close the trade, and because I want to manage my risk properly, since the stop loss area has changed. So that's closed at break even. And I'm going to set up another pending order, also a buy trade, but this time with my stop loss a little bit lower to give the trade room to breathe. And then entry price will depend on where this candle closes. So we'll keep an eye on this one. But this one's giving a, this is fine. So it's Euro USD. GBP USD was a no man's land, has now pushed up. And now we just need to wait for price to test the supply level, where I can look for potential sell opportunities over there. So I'll keep it on this one. Then we've got NZD USD still in no man's land. So yeah, definitely no trade for now. Again, either wait for price to come down to the supply, to the demand here, or if it's going to continue pushing up, wait for it to come to supply, but nothing for now. Dollar CAD is now pushing down. So if it's pushing down now, we just wait for price to come test the demand zone at the bottom before looking for buying opportunities up here. Dollar Swiss doing the same thing. It triggered here, but I want to update my stop loss. It's in break even here, so I'm going to close this trade at break even, and then set up a new pending order because I want to have a bigger entry to stop there. Okay, so stop loss will be somewhere here. I'll confirm. We just need to wait for this candle to close before placing the order. Then, okay, USD JPY has triggered. It's in a little bit of a profit, and I'm happy with the trade order, so that's fine. And then, Euro CAD, we just have to wait and see what direction this trade moves. And then GBP CAD, we can see here, price has moved up into the supply area, so we need to update this sell order over there. And then CAD JPY, price did come back in here, but I missed it, so we'll keep an eye on this one. On the candle close here, we've got Aussie CAD is in profit, so that's fine. I'm happy with the stop loss. Everything's fine there. And then, NZD CAD, we missed this one, so that's fine. We'll see if it comes back down, but we'll leave that one for now. And then gold, since it's moving above the stop loss area, I'm still happy with the entry, but what I want to do is update the stop loss. So I'm going to delete this order and then set up a new one, sell stop order with the entry price at the same level, but stop loss we will need to see. That's gold. So we'll just wait for this candle to close. Then what do we have here? US 500, we'll update this one as well as UT 100. Okay, so those are the setups for now. We just need to wait. We just need to wait 7 more minutes before price closes on this candle, and we can place new trade orders. All right, but in the meantime, what I'll do is while we wait for the market to set up, I'm going to switch my screen and quickly break down The 5 steps I used in today's session to see exactly what system I followed to look for trades. Okay. So again, this is a 5-step strategy which consists of identifying levels. Step 1, step 2, drawing the levels. Step 3, analyzing the price action. Step 4, looking for confirmation of entry. And then step 5, placing the trade. So if we look at the first step here, which is step number 1, identifying the levels, what you do here is we identify the potential supply and demand levels on the 4-hour time frame using an indicator called forex volume, which is an indicator that helps us to identify probable areas, high probable areas where the smart money stepped into the market for identifying our supply and demand levels. Where our supply level is a zone, a sell zone, which is a horizontal price level where price shot down with high volume, and the demand level is a horizontal price level where price shot up with high volume, or in other words, a high probability buy zone. Okay, that's step number 1. Step number 2 is to draw the levels, where we then drill down to the 15-minute time frame. We draw the supply and demand levels on the 15-minute time frame, still using our forex volume indicator to help us to identify those high volume spikes where price either shot up or down with high volume for potential supply and demand that we can draw. That is step number 2. Step number 3 is to analyze the price action, where the analysis is done on the 15-minute time frame. And when analyzing the most recent price action, but what we want to look for specifically is to see where price is inducing the amateur retail buying or selling in the market, and analyzing the price action at our forex bank clues, which is our supply and demand levels, which are either a high probability buy zone for demand or a high probability sell zone for supply, and then align our analysis in line with the smart money. Then step number 4 is to look for confirmation of entry, where the confirmation of entry is to identify currently which supply or demand level price is currently testing, where if price is currently testing supply level, then we look for selling opportunities, and if price is testing a demand level, we look for buying opportunities. Okay. Okay, so that's step number 4. Now, step number 4, we sell from the most recent supply to the most recent demand if price is currently testing the current supply level, and we buy from the most recent demand to the most recent supply if price is currently testing the demand level. This here is supply and demand 101, where we sell from supply to demand and we buy from demand to supply. Okay. Again, that is step number 4. Then step number 5 of this strategy is to place the trade, where we place our trade order before the NFP high impact news is released. We will use a combination of any one of these 3 options, where the first option is to use the most recent fractal high or low to place our entry and our stop, or we use the sideways range high or low if the market is ranging at our entry area, or we use the candlestick high or low if we're going to be using a specific candle to set our entry or our stop loss. So any combination of these 3 options is what I use to place the trades using the strategy. Okay, this is a 5-step strategy where, again, when placing the trades, we always want to make sure rule number 1 is to always manage your risk. Okay, always have a predetermined risk factor. We never risk more than a specific amount per single trade. That is not more than a specific amount that you want to risk per trade of your account. So always know where you're going to enter the market, where you're going to exit the market with the loss, is where you're going to as well as where you can exit the market with a profit, so that you'll be able to calculate your trade risk, your points at risk, as well as the volume that you need to make sure that this is the volume you use that will not allow you to not risk more than your predetermined risk factor per single trade. So this is the 5-step strategy. Now, what I'm going to do, since the candle is about to close, the 15-minute candle, I'm going to switch back to the charts here. And back to the charts. What we're going to do now is confirm any final trades before I end the session today. So, US oil is still in no man's land. So either need price to push down to the demand or push up to the supply before looking for any trade opportunities. So no trades for now on US oil. Aussie dollar is now pushing into the supply level, which we could look for potential trades here. However, we do have so what we can use here is for the sell stop order, which I do want to place. Okay, entry or stop with stop loss. I'm going to use the fractal high just above the supply level, but the entry I'm going to use this fractal low, which is the bottom of the range where price shot off the supply level over here. So you can see price shot down and has now pushed back into the supply or the entry area for the sell setup. So I'll use this fractal low over here for the entry of the sell stop order for Aussie dollar, AUD, USD, where the entry price for the sell stop order, we're looking at 0.6685, stop loss 0.6706 on AUD, USD, sell stop pending order. Okay, that's Aussie dollar. Cool. Next is Euro dollar, which I said I want to look at placing a buy order, but we can see now price is testing the supply, which is our high probability sell area. So what I'm going to do rather with the Euro dollar here is I'm going to switch this to a sell trade. So I'm going to go sell stop with my entry price. I'm going to move here, down here, and stop loss. I'm going to switch over to the fractal high just above the supply level. So entry, I'm using the fractal low, the first fractal low that price came off the supply level, which is at 1.1644 and stop loss 1.1665 on Euro dollar. Okay. Next we have so next we have here on GBP USD, price is testing the supply as well. So that is a sell order that I want to take. So let me delete this with entry price on the sell stop order on the fractal high over here, just above the supply level, and entry, again, the first fractal low of the demand over there. So this fractal low over here. So entry 1.3422, stop loss 1.3454 on GBP USD. Right. Next is Kiwi dollar. Still in no man's land. Price is pushing up, but no trade for now. So not going to focus on this one for today. Dollar CAD also in no man's land. Needs to test either the supply or the demand before moving forward, but no trade for now. Dollar Swiss is giving a sell setup that I want to take. So what I'm going to use here is the high of the candle with this high volume over here, the high of the candle for the stop loss, and the low of the candle for the entry as well. So entry price is 0.7985, stop loss 0.8012 on dollar Swiss. Right. Next is USD JPY. So dollar yen. I'm still happy with this setup, with the sell setup. So perfect with that. Still running over there. And then next is EuroCAD. We've got our trade set up there, so I'm still happy with that one. Which either way this trade goes, that's fine. And then we have GBP CAD, which is currently testing our supply over there. So I do want to place a sell stop on this one. Stop loss, I'm going to put it on this fractal low, just below supply number 4. Entry needs to be the first fractal low off the supply level over here. So this fractal over there, giving us an entry price of 1.8627, stop loss 1.8658 on GBP CAD. This is a sell stop order. Now we move on to the next symbol here, which is CAD JPY. So the sell setup here is, what I will do is I'm going to change this from a sell stop to a sell limit, because I do want to take this trade, but I rather want price to come back into my entry area over there. So same trade, same entry, which is 113.56, and stop loss is the same, 113.73 on dollar CHF. But this time it's a sell limit order. Yep. So price has to push up first, trigger the trade before continuing down into profits. Right. That's CAD JPY. Next is Aussie CAD. So Aussie CAD, the trade is in profit. Yeah. I'll need to move it to move a bit slightly higher before I move my stops to break even, but I'm happy with this one, with the setup as well. So that's fine on Aussie CAD. Kiwi CAD. This one here has moved past where I wanted to place my entry. So this one can be a buy limit order. Okay, same area to enter, just changing it from buy stop to buy limit, with entry at 0.7954 and stop loss at 0.7935 for NZD CAD. And the next symbol is gold, which I want to update. So entry price is the same at 4,456, but stop loss now, what I want to do is change it to the fractal high above the supply number 2 here, which is all the way here. And entry, I'll move it a bit tighter to this fractal low. Was actually the same, the low of the candle with the high volume over here. So the entry is now 4,458. Okay, just a bit slightly higher. Okay, on gold. So there we go. And then next we move on to this is US 500. So US 500 stop loss. I'm going to move to the high of the candle with the high volume. Entry to the low of the candle with the high volume. So this will move up here. So it's broken through supply number 1, currently testing supply number 2. So entry here is 6,931 and stop loss 6,946. So stop order S&P 500. Okay. Then next we have UT 100, which is NASDAQ. Stop loss I'm happy with. I'm just going to change the entry here. Let me delete this to the low of the candle with the high volume. This is still currently testing supply number 1 here. So entries at around 25,552 and stop loss 25,640. Okay, so, equity 100. So, then we have the units, as you can see, price has broken one. So, yeah, with this one, rather for price test 2, where you can look for selling opportunities over there. But for now, we'll just keep it on this one. Okay, we'll keep it on this one. So no trade for now. And then oil, we're back to oil. So oil is still in no man's land, and those are the setups for today. So just before I end the session, for those of you who haven't traded with CWG markets before, and for maybe those of you who are serious traders looking to maximize your profits, with a minimum amount of capital. We do have a CWG Markets Cent account where you can deposit a minimum of $10, which gets you access to high leverage multi-asset trading with CWG Markets, making your trading more efficient with MetaTrader 5. You'll still get high leverage from 1 to 1,000 and still have EA automation support, and also access to diverse trading products with ultra low spreads. So if this is you, scan the QR code on the screen there and open up an account with CWG Markets. And also, once you've opened up an account, a Cent account, or any of our other advanced accounts that we have, also reminder to take advantage of the welcome deposit bonus, which is 100% welcome bonus to help you to double your deposit and increase your trading power with 100% deposit on every deposit up to $1,000 on your trading account. Okay, so that is a 100% deposit bonus. We do provide coaching as well. For those of you that want to further your trading journey, we provide access to that with CWG Markets, where above getting access to our daily market tips and analysis, our knowledge building sessions, our live trading sessions, our expert-led coaching sessions, as well as helping you to develop your trading plan and helping you to select an account that meets your needs to help you to achieve the goals that you want to achieve through trading, and access to our CWG Points More program. For those of you that want to get access to the free coaching, then I'd like you to either send an email or you can send me a direct WhatsApp by either sending me an email or a WhatsApp with the link, whichever one you prefer, and send me the message coaching 30 so I know you're from the session and we can arrange a coaching session with you from the session today. So either send me an email or a screenshot as well, whichever one you prefer. Okay, whichever one you prefer. So make sure you contact me, and you can select the links, or you can scan the QR codes that you see on the screen over there. But other than that, traders, that's going to be it for the session. We've already identified the trades for the session today. Hopefully you did enjoy the session. But other than that, we'll keep you updated. We will have another webinar on Monday, where we'll just have a look at a general overview of the market for the week. The webinar will be set up on the group here as well, on this channel as well. So keep an eye on for the next webinar, which will be on Monday afternoon. But other than that, ladies and gentlemen and traders, enjoy the rest of your day as well as the rest of your weekend. I'll see you on Monday, but bye for now.